Welcome back, ladies and gentlemen. You're watching India Tonight with me, Sumita Karir, and my colleague Shibani Garg. She's joining us from our Mumbai studios. And let's now put the focus on silver, well, because the commodity continues to dazzle, massively outperforming gold with gains of more than 100% for the year. In fact, industrial demand, particularly from solar panels, EVs and data centers, combined with the shift in ETF flows and even physical demand have remained the key drivers of silver prices, Shivani. And in fact, investors are now looking to invest more.
Absolutely. And you know what, Sumita? First, we'll speak about gold and silver prices. But tell me something. Are you a gold person or a silver person?
Absolutely. I'm a bull, a long-term bull on silver.
I'm a gold person, but today in particular, I'm wearing silver. In fact, investors are also now looking to invest more in commodities, given the continuous rise in gold and silver. Analysts say that the metal is now outbrought on quarterly charts. So how long will this sheen last? Today, to discuss this, we are joined in by Nitin Kedia, National Secretary, AIJGF, and along with him, we have Ajay Bagga, who's a market expert. All right, first, we are joined in by, in fact, Ajay Bagga. Ajay, so good to have you on ET now. Ajay?
Yeah, go ahead.
Yeah, Ajay, silver has posted one of the strongest yearly gains in over a decade, even outpacing gold. What are, the key global drivers, according to you, behind this surge? Supply deficit? Is it industrial demand? Safe haven flows or something else?
See, silver is basically gold on steroids. So when silver does a catch-up rally, it goes much faster. In a bull market for precious metals, silver tends to outperform. If you look at 79-80 bull market, gold went up some 3 times, silver went up 7 times. Again, in the global financial crisis from 2008 to 2012, silver outpaced gold by nearly 3 times. So this time it's been more of a catch-up rally this year for silver, while gold has been rallying for nearly 3 years now. So the gold allocations have more than doubled over the last 3 years just by the appreciation in the metal. Silver is still got room to run. And as you correctly mentioned, most of the silver demand is industrial. There are 3 big drivers for silver. One is the solar panels, where solar panels have gone up something like 10x in the last 10 years. Silver demand has not been keeping up with that because people are reducing the intensity of usage of silver, but the silver demand for solar has gone up 3x in the last 10 years. If you look at data centers, electronics, where silver is again used, that has gone up 50 times in the last 25 years. The capacity of data centers from about 1 gigawatt, it's gone up to 50 gigawatt. Again, silver has not kept pace with that, but still the demand is up nearly about 3 times. If you look at EVs, an EV car, electric car will use about 70 to 80% more silver than an internal combustion car. And EVs are gaining market share versus ICE cars. That itself will lead to about 3 times the demand. Add to that, you don't mine silver on its own. So silver is mined as a byproduct of you doing copper mining or zinc mining, lead mining, some amount of gold mining. Silver is co-located with that. Nearly 80% of silver gets mined as a secondary product. So you can't increase the supply. And if you look at the mining, that has been quite steady for the last 3 years. In fact, it's been an undersupplied market. Add to that, when the investment demand comes in on this booming industrial demand, you add on an investment demand. That's what we are seeing. And we are not through. So, you might say it's oversold, all those technical things. Maybe, yes, it will, be plateauing for some time. But no fundamental holder of silver in India. If you're an industrialist, you're using it, there is no option but to use silver in your solar, in your EV, in your data center, power grids, transmissions. Or
Absolutely.
if you're investing, you will hold it
Absolutely.
forever.
Absolutely, Mr. Bagga, and we have seen the Indian government come out with policies with respect to whether it's the EVs or data centers, and this is only going to grow. So let me take off from what you said essentially about, there being more upside to the silver rally. And let me also get in Mr. Nitin Kedia. He's the National Secretary, AIJGF, All India Jewelers and Goldsmith Federation. Mr. Kedia, what is your expectation in terms of silver rallying more this itself? It's been over 100%, which has superseded gold. How do you first reconcile both the data that's come in on account of gold and silver, and is there more upside to the rally as far as silver is concerned this year?
Yeah, good evening. First of all, let me remind you that during Diwali, when we connected, then on ET Now Swadesh and ET Now, it was the first channel in which we broke that before 31st December, silver is going to touch 2 lakh rupees in on the MCX side. So today, I think I must congratulate the platform, which has been very noble for me, which has been very pure for me. And whatever I said on this platform has today came true, and silver has touched 2 lakh rupees on the MCX. Now, if we go 4 months back, then what has happened that let's go back to 8 months back. What was happening that there was a Section 232 investigation which was going in US, and because of that, it was expected that there may be a tariff which can get imposed on silver, and approximately 500 MOZ silver was exported from London to CME Worlds in first 2 months, and in the last month, 300 MOZ of silver was again exported. So the London was short of around 600 to 800 MOZ of silver. Now, when Section 232 investigation came out, it was clear that US has holded silver in the critical mineral list, but they did not place any tariff on silver. So it was expected that the silver again will move back to London, but the export restrictions which were placed by the US, due to that, silver could not move there. Now, what happened that 660 tons of silver from China, it went to London, and when China when they learned that the silver has moved to London, they immediately responded, and they responded with some export restrictions on silver. Now, earlier we used to see geopolitical war happening with the guns and tanks. Then it happened with currency. We used to see the currency wars. Then we saw that initially it was a critical mineral war which was happening with the US, between US and China. Now, as Ajay sir told that there's a lot of demand which is going to come from the AI center, and it is expected that the 19 million ounces of the silver will be needed by 2030 alone by the AI data centers. So to now, what the US and China, what they are doing is to fulfill the demand of AI of the electricity. They are building the nuclear power plants, and for that nuclear power plants, you'll be needing some 19 million. So already for last 4 5 years, we were seeing that there was a structural deficit of silver from the supply side. And again, when this demand is going to move up,
Yes.
so that's the investors that they were coming up. And in the last expiry, the buyers came on the comics and they asked for a delivery, and sellers did not had it. We saw immediately 15-20% jump coming in silver, and
Yes,
that's
yes.
where we
Mr.
are at
Kedia,
tonight.
thank you so much for mentioning that you were here, and you mentioned how, silver is going to get like an unprecedented rally by the end of the year, by December. So silver prices have doubled in a year. You mentioned how MCX rates have hit unprecedented highs. How is this affecting the jewelry demand across, the country, especially, in the tier 2, tier 3 markets as well, where silver jewelry is also preferred?
See, we were expecting that during this marriage season, when 49 lakh marriages are about to happen in 45 days, we are expecting there will be an average buying of 24 gram, which will happen. That 24 gram has dropped to the 21 gram right now. And the jewelry industry is currently very much impacted by this low demand because of the higher prices. And that's the reason we are asking to stop the import duties from the government. As of now, the demand would be around 80 to 90 ton. for this quarter of the gold, October, November, December, which was expected to be around 120 tons.
Right. Mr. Baga, let me also ask you about your advice to investors who bought in earlier in the rally. Should they be holding through the volatility or locking in gains, I beg your pardon now, or should they be booking in profit as far as this metal is concerned?
See, we normally used to suggest about 5% as asset allocation to gold and a little bit to silver. There were very few avenues apart from the commodity traders. There was very few avenues apart from holding the physical silver. That has changed with the ETFs coming in, and you are seeing the massive purchases of ETFs that are happening in silver, both globally as well as in India. I would suggest that now probably the silver and gold allocation in portfolios would have gone up to more than 10%. You can hold it at a very strong 10%. I would not recommend more than that, because what happens is once these peaks are achieved, then for a number of years, gold and silver don't perform. However, in India, because of the rupee depreciation, because of the traditional high inflation, you used to get a much bigger kicker in rupee terms. So that debasement trade of rupee losing value against global currencies, that could be played out through buying gold and silver. So in short, I would say not more than 10% of the portfolio in gold and silver. If you look at your total holdings, Indian households, for example, are holding nearly 30,000 tons of gold. Silver, we can't even calculate because traditionally we have inherited so much silver in every family. That calculation is just not there of the amount of silver we are holding. Already we are overloaded on gold and silver as a community, as Indians. So I would say on the financial performance side, maybe 10%. But again, we saying something scientifically will not matter. Indians are buy and hold, and they will keep on buying gold and silver and continue to hold it for very long times, which is a very good mantra for success overall.
Mr. Bagga made a very valid point and excellent segue for my question to you, Nitin. In fact, India is importing most of its silver, and with rupee fluctuating, are jewelers facing cost pressures or supply shortages, and are dealers cutting into inventories that they are buying into, or they are buying into this rally, according to you?
See, till Diwali, there was a supply shortage because a lot of banks, what they had done is that the general premium was around 15 to 20 cents when an importer imports silver. That went to around 250 cents or 300 cents. But what has happened right now that due to demand, we are seeing a discount of around 6,000 in the spot silver or physical silver. If you go today and buy a silver from any dealer, you will get that at around 6,000 rupees discount. As of now, because of a low demand, dealers or jewelers, they are hesitating to bring or build a new inventory because January traditionally it is being seen that the prices move more higher because of the portfolio rebalancing and the Chinese New Year. So that's a fear that if in January we see a 6 or 7% price hike, then it will hamper a demand more, and that's a worry that we are in a tension for the month of February also.
Right, Mr. Baga, let me get in just one final question before we end this discussion. I mean, how much of changes in trade policy or tariff supply chain realignments rather, going to affect silver prices going forward? As you would know that we are already in the midst of negotiating a deal with the United States. There is EU deal also happening. There's several other geopolitical factors. How much of those factors are going to weigh in on silver prices? If you could answer this one final question before we wrap up this discussion.
Yeah, see, US has termed them, what Mr. Kedia mentioned, as critical minerals. So there is a 232 on. Right now, they've not put tariffs, so we have escaped that. But overall, what is happening is, especially if you look at gold, the Russians and Chinese are hoarding the amount of gold that they produce. One part of this rally is also the Chinese property buyers moving into gold and now probably into silver. We have not got those reports. It comes with a lagged time. But it's probably the Chinese household which has lost about $14 trillion on paper value on their property holdings, over leveraged properties being held. They have moved to gold and silver over the last 2 years. That is part of it, apart from the industrial part. So India being totally dependent on exports of silver, we will have to find friendly countries which are mining this. We'll have to increase domestic mining wherever we can, wherever the zinc and the lead and copper miners, we have to make sure that they are also producing silver along with it. So it is a long haul for the government, but the appetite for silver will not reduce. So both gold and silver are fancied by Indians traditionally. And I would probably hazard a guess that it's probably at 15% of most portfolios today because of the sharp rise in gold and silver over this year. Will they sell off? I don't think so. They will allocate more to equities. Nobody is getting into silver or gold at these very high prices except the SIP routes in the ETFs. But nobody is going to sell, is my premise.
Absolutely. Both, gold and silver are fancied by Indians, as you rightly pointed out. Thank you so much, Nitin Kedia, Ajay Baga, for joining us today.